Hello, I'm Sam Meredith and welcome to the week ahead, where joining me to discuss the market movers this week is trading analyst from ForexLive, Ryan Littlestone. Firstly, Greek banks have opened for the first time in 3 weeks in an attempt to boost confidence in the country's crippled lenders. Despite many restrictions in place for the banks, this does seem to represent a morale-boosting step forwards for Athens. How do you think this will impact on market sentiment?
It's going to be a slow process. The banks have opened, yes, but there's still the same capital controls, in effect a €60 limit, which is now you can take out in 1 week. So they're not fully operational yet. The Greek markets are still yet to open. We've had news this morning that they're going to stay closed through the 22nd of July until the Greek parliamentary vote on the new bailout. When that does happen and they do open up, then there's still going to be a risk in the markets of how they react, whether they suddenly jump up or whether people have still been queuing up to hit the sell button. As far as sentiment goes overall, the euro isn't really affected by it anymore. It switched its focus completely to policy divergence between Europe, the US, UK, and any good news in Greece is largely being brushed aside. As usual with Greece, there's always a long way to go, and there's still plenty to be done on this issue before anything's settled. As we know, it's just another can kicked down the road for the moment.
A fifth of China's stock markets have remained frozen today as trading slows to a trickle. The ongoing suspensions are raising doubts about the sustainability of a rebound in Chinese stocks too. Are these signs that the Chinese market is regressing? And just how extreme are these government interventions?
China's got a big fight on their hands. You know, the market is looking at slowing growth once again, and the Chinese authorities are throwing a kitchen sink at the stock market. We had stories last week that they were putting between 2 and 3 billion yuan, which is roughly about $500 billion, to prop up the stock market. They're banning people from short selling. They're telling company shareholders who have large holdings not to sell. They're getting hedge funds, banks to prop up the market. So they're pretty much throwing the kitchen sink at it, but the market sees that there could be weakness in China again. And, you know, one thing they love to fight is intervention. They did it with the Japanese, the BOJ, fighting intervention, you know, a few years ago when dollar yen was trading around the 70s, 80s. We had those intervention moments. They got snuffed out. So unless the data starts picking up and the economy shows sign that it's not going to slump, then the market is going to start worrying about China and growth, and that's going to spread across to Australia, Japan, and the Chinese are going to have a big fight on their hands to keep this market up and keep stocks up. And if they give in, then we're going to have a big fall. But then you don't bet against the Chinese. They've got the largest central bank in the world, and they're not afraid to throw money at something to keep it propped. So it's going to be an interesting battle, and I'm not sure which way it's going to go, but it's going to be one to watch.
Lastly for today, looking ahead to the rest of the trading week, which key indicators should we be looking out for? Are there any potential market movers in store?
Yeah, we've got the Bank of England MPC minutes on Wednesday, and that's going to take a lot of focus from the market, especially from obviously the pound. After the recent comments last week from Mark Carney, Governor of the Bank of England, you know, he's had some hawkish comments prompting that the rate rises could come quicker, could come at the end of the year, and that follows on from David Miles and Martin Wheel and other Bank of England hawks who last month also said that August may be a date. McCafferty said that rates could come sooner than the markets expect. So there's going to be some big focus on the minutes to see if any of those voting patterns have changed, to see if any of the hawks are voting for hikes. Late last year, we obviously had the two main hawks, Wheel and McCafferty. They started voting for hikes, then they backtracked as the data softened. They're going to be the ones who are going to change their mind. So the market reaction, if we do see those two voting in favour of hikes, it's probably going to be a knee-jerk up in the pound, but maybe not too much because they'll be the ones expected to do so. If they're joined by anyone else, then that is really going to kick the pound higher because that won't be expected. Personally speaking, I think that these minutes are probably too early. The July meeting is probably too early to call rate hikes. August is where I'm parking my money, where we first start to see a move in voting, because by then you should have the second quarter GDP numbers out, and that will give the Bank of England some ammunition to talk about hiking rates. So I think the minutes on Wednesday are the ones to watch for pound traders.
Thank you, Ryan. Be sure to check back to see how these market movers develop with Monica Gibson on Friday's wrap-up. Goodbye for now.